It is March 23rd, 2020, and we're in the midst of a historic downturn, bear market, extremely fast, gut wrenching, ripping, hemorrhaging eyeball type of market out here, caused by a virus and obviously an over leveraged economy that's just been skating on thin ice, scoring all time highs day after day. So, today, after I show you the account, I'm going to tell you why I've switched mainly from selling options to buying options. Crazy, volatile world that we live in, and what my reasoning is behind that. So I'm going to take you into that. But first, let me show you the account. What? What is this? I've conquered technology? Well, yes, I have. I'm using the 5K. Oops. Maybe I've conquered. I don't know. The 5K player here to show you the phone version of the account. Isn't that great? So I'm sitting at 47,926. Of course, this day was very volatile. It started off at, as you can see over here, at about the same that I'm right now, 47,000. Went up to 50,000 and then back down to like 44,000. Then finished at about 47. And now I'm sitting almost at 48, which is very interesting. Very interesting indeed. So I'm super impressed that I'm able to link up this mirror play. So I'm going to be going through the phone right now, although I do want to show you something on the account later, which is this. All right, so oops, I'm conquering technology. I've got this. All right, so first of all, this is the account, and you can see on my options plays, I have them by dollars gained or lost at the moment, so I'm gonna give you a little show of that. So you can see silver calls gaining 150, gaining 124 for the GDXJ, and then Apple calls down 650 some dollars, and then the other silver call is expiring in January 15th of 2021 is up 72. That's two calls right there. Then I have EXK gaining a little bit. Apple down only $177. It was down a lot more earlier. It's regained some of that in the aftermarket. And of course, the various funds going down. Market was down about 2.5%, and I'm about flat today. So I'm beating the market for a first time in a very long time, which I'm kind of excited about. I'll take anything at this point. I made some purchases, especially in the real estate. The thing that halving or more than halving the prices of some of these funds is justifying me to start moving some cash in there, since I don't really have any leftover cash. I'm just kind of reshuffling stuff. I sold one silver call already to try to pick up some of this real estate. I don't know. We'll see if it's a good decision or not. Since I'm expecting more downside in the oil, I also reshuffled a little bit out of the Russian fund. I sold 20 shares of RSX and put them into some real estate. So that's what happened there. Moving on here, I have the silver, of course, the silver miners and gold miners. Everything else is up today. I have an account full of gold miners and silver miners. So that's doing all right today, offsetting some of my non-event Robinhood portfolio, which is fine. And then the emerging market fund is one of my biggest at the moment. So this fund over here, this is the weekly chart, month, 3 month. It's seen definitely some kind of beating, but I think the emerging markets are going to recover faster and stronger than the U.S. markets. Whenever things do start to recover, this is the 5-year chart here. So I'm very heavily invested in that at the moment. I have 200 shares. That's almost $6,000 worth. And then, of course, Royal Caribbean is rebounding a little bit today, but I'm still down significantly on Royal Caribbean. I bought it thinking that it had started to go to bottom out, but of course, I'm early, just like all of my moves. I'm extremely early on these things. I'm not patient enough to wait for them to drop to a significant level to where I can rebuy at a great price. So I'm suffering for it, and that's that. But I'm gonna stick with it. So far, I've lost 35% on this position here. I have 70 shares. And another interesting play that I've been doing is LUV, which is Southwest Airlines. I also try to scoop it up towards the bottom, and as you can see, I was 15% off, but you may or may not have hit the bottom, especially with some of the federal money and private debt credit that's been extended to some of these companies. So I also have a call on LUV, which I'm down 20% on, which is fine. This is kind of a 1 year play, and we'll see if it works out. So as you notice, I have a lot of options that I've bought. And by the way, just to show you here while I have it, look at the watch list. It looks a lot worse than my actual account. So we have Canada dropping down 6%. There's the SBY dropping down 2.5%. WP Carney, which is 6 shares that I bought. I bought them today, so I've actually not lost much. I'm just up $1.5 or 0.5%, even though the price has declined 11%. So I bought it towards the bottom. We'll see if that keeps dropping. Most likely the real estate will keep dropping, but we never know. So yeah, I mean the watch list has been decimated here. I have I'm watching South Korea. I'm watching PPL and D. Those are basically utilities, which also are also dropping with the overall market, even though they're supposed to be more of a defensive play. So other than that, Stag is just industrial REIT, and that's also dropping by 15%. So these are my position. ATCO, by the way, is C-SPAN. They've renamed it. So I was stuck buying it at $10 a piece. I have 100 shares. I'm gonna wait for the rebound. That's gonna take a while. Visa incredibly has been dropping quite more than I thought it would. This is the 1 week, 1 month, 3 month, 1 year, and 5 year. It's holding pretty strong in the 5 year. It has not dropped down below its December 2018 lows, which is pretty impressive. I wish I had more money to put into Visa, but I'm already down 20%. I'm not going to reshuffle and put more into it. Okay, so just to show you the overall account, since I have you here. Oh, I'm in the green. Haven't seen the color green in quite some time in these markets, so kind of excited. So this is the week performance, down 11%. 1 month is 45 and 3 months 45. So basically, in the last month, all of the losses of $40,000 almost in this account. Not because I wasn't ready for a downturn, but because I pulled the trigger too early, and I'm probably pulling the trigger too early now, since we may or may not have another year or two of recession/depression. And of course, I'm too early, but I'd rather have money in the market than outside the market. So at the risk of overpaying for stuff, I don't mind watching numbers go down, right? So I don't mind that prices go down. I don't mind watching red, but what I do mind is having my dollars outside of investments, because in the long term, not right now, but in the long term, I know that the US dollar will depreciate against assets. So it may not happen for a while. The dollar may stay strong for a year or two, but that's why I do what I do. Okay. Now I do want to go into the account though on the website to show you something here, and so I'm gonna close the phone down. I want to show you the account in a different perspective. Okay, so I want to show you the margin. So I've used almost $30,000 of margin right now, and I have $47,900 in stocks and options. But the margin used is basically stocks and options too. So it's really the same thing. But my overall market account value is $78,000. So I have more money as a total value now than I did before the market crashed, or about the same. No, I have more because I have 25,000 in cash. So I have more money in stocks now using leverage than it did before the crash. So if things were to recover, this would be a monster boost if I manage to keep all my positions. Okay, so I'm not really that insane when I'm making these things. I mean, it's very, very risky play, sure. Okay, it's betting on, I'm gonna be looking at a lot of red, yes, and my account has dropped way below its initial value, even the money that I've originally put into it. That's also true. But the setup now for a big rebound is stronger than ever before. I have, like I said, I have more total amount of money invested in companies now than before the crash so far, before this 35% or so crash in the markets. So if it continues to drop, I won't be able to participate anymore on the downside unless somehow miraculously I summon some dollars and I'm able to put them into it. But I've already put a lot of money into it, into the account. So I'm kind of dry at this point. I may sell some options in order to buy more assets. That's definitely likely, as I think silver will be the first to rebound. So I'm planning on rolling over these silver calls into some productive assets that are not productive right now, but hopefully in the future, once we have defeated this virus, will be productive again. Now, I wanted to show you something before I go here. And let's see if I can still show you the phone. Maybe not. Let's try this. Yeah, maybe I haven't conquered technology, eh? Maybe I'll show you on the browser. I closed the phone and it, I think it kind of stopped. Oh, there we go. All right, so I'm gonna show you on the phone because it's a little bit easier to tell. The phone interface is better than the website, I think, which is, I really like Robinhood because I can just browse the phone and it's still pretty cool. So the reason why I'm turning from selling options to buying options is because even though the implied volatility of options is higher now, it's a lot higher now, it's still not higher than what I think the volatility is, right? So that's my criteria for buying versus selling options. So for example, let's take a look at this option here, this $300 call for June 18th for Apple, which is probably not going to materialize, sadly. Might have to get rid of it. But at this pace anyways, I might have to extend. Oh, never mind, it's 21. I'm sorry, this definitely, I'm definitely keeping this one. So anyway, so you can see the, you can see the volatility here. It says 31.4. Okay. I can show you right here. Implied volatility. I don't know if you can see my arrow. I'm gonna have to review that and see if it works out. You can see implied volatility here, 31.4, but I actually think it's a lot higher than 31.4, right? So if I think the volatility is higher, then it's more advantageous to buy the option rather than sell it. If I think the volatility is lower, then it's better to be a seller of options. So that's my criteria. Some of these options are really high up there. So let me show you, for example, the LUV option here. Its volatility is 98, if you can see right here with my mouse cursor. It's 98, which is enormous. Okay, 98 and a half. But it's a less, it's a smaller company than Apple, and there's a lot more turmoil going on in there than Apple. So it's understandable, but I still think the volatility for this stock is going to be higher than it's implied. So if you go to the actual, if we hit LUV up here, Southwest Airlines, you can see that it's going up and down like tens of percents each day. And that is just enormous volatility. You can see here from 35 to like 29. I mean, these are like 15-20% drops, or up days or down days on any given day. That's crazy volatility. So therefore, I'm a buyer option at this point. So I hope that makes sense to you guys. I don't know if you have any questions about that, or let Let me close that. Okay. I don't know if you have any questions about that. If you do, shoot. I'm still trying to conquer technology here, so forgive me if I'm stumbling, but I'm trying to make it a better experience listening to my face. But anyway, if you managed to watch this video all the way through, hopefully gain some value. But if you did, I want to know about it because I care. So write down in the comment below technology if you've watched this video all the way through. All right, write technology in the comments. Peace out.